going on, guys? This is the Investor Channel as always. This is your host, Prince Dykes here. Yeah, I'm a little lounged out today. It's like 3 or 4 o'clock in the morning here in Hawaii. So, um, kind of got up to execute a trade and record this video. I did a tutorial on it. I did a step-by-step video on it that I'm going to show you later on in the video. But I want to give you guys a little backdrop or whatever. So, this trade is on Walmart, WMT, that just came out with its earnings. The last time I looked at the stock, it went up like 8-9%. Now, the crazy part about this is that everybody, not every single person, obviously, but majority is a big general consensus that Walmart was going to drop off. Why? You just had Target yesterday, it dropped 10%. J.C. Penney, Nordstrom's, Macy's, all the brick and mortar retailers have been struggling this quarter big time, drastically, just due to the whole fact of, um, brick and mortar retail is kind of a thing of the past. Everybody's getting everything off of Amazon nowadays. So it was a pretty easy pick to say puts that Walmart was going to drop off and fall off the map along with everybody else. So when I saw this high put volume, everybody was going against Walmart. I said, you know what? The market is not that easy. The market is designed for majority of people to lose. And majority of people, are about 90% of people you see playing are losers. Well, Prince, that doesn't make sense because I've seen this person make money. Yeah. You're going to have your good trades. People are going to make money. But overall, is going to take his money back, right? Now, the reason why that is because think about it. If everybody was just able to start a TD Ameritrade, a E-Trade, a Trade King Scott trade account and just start taking money out of Wall Street, then guess what? The economy would collapse. That's not what it was designed for. So the market has a way of taking people's money. For example, let's take me, learn from my own situation, Home Depot, right? You really follow me on my Facebook page, World Financial Investment Group. I put up, about Home Depot. Hey, I'm going to do this for Home Depot. Home Depot ended up burning me very bad. But the reason why, and Home Depot had great earnings. I thought it was going to do good. It did good. The stock just traded down. I said, Everybody I know, everybody in their right mind was bullish and brought calls on Home Depot. Maybe a few put people, but most majority of people was doing Home Depot. And that's when I sat back and I said, the market has a way of taking people's money. So when I saw everybody had puts, nobody had calls, what did I do? I brought some calls. You guys gonna see in the video when I buy these calls and when I sell these calls, what the profit was, all the good stuff like that. Probably you can see in the description as well. I'm going to go in step by step when I brought and step by step when I sold. You know, all that stuff like all that good stuff. Anyway, but anyway, that was the situation, and it's a trading style people use for contrary trading, trading or whatever. If I'm not saying it right, but pretty much the notion is that hey, most people that play options are wrong. So when they see everybody going one way, they can go against the other way for cheap. For example, let's say like in Vegas against a big fight, everybody knows this one fighter is going to win. It's a general consensus that this fighter is going to win. So for very cheap, somebody will bet that that fighter is going to lose. If they're wrong, they lose a little bit of money. But if they're right, they make a lot of money. It's a trading style that some people use. It's one that I utilize here. With Walmart, to be honest with you, I didn't even read the report. I just saw everybody was going one way. I said, hey, I'm just going to go against everybody. Just a little bit of money just to see because I don't think the market, well, I know the market is not that easy to make money from. But anyway, I don't want to talk and get tied into it, get straight into the video. I don't have a lot of time. I definitely know you guys don't have a lot of time. So, hey, man, just roll that beautiful bean footage. I'll see you guys on the other end. A little bit of the definition, as you can see, off of Investopedia. And the whole idea of this one, right? We're going to look at, for example, Walmart's getting ready to come out before the markets tomorrow. And we're going to look at the option chain. So, obviously, retail's been getting beat up from Target to Sears to J.C. Penney, Macy's, Lowe's. Everybody's been getting beat up left and right. So, it's not looking too good for, let's say, Walmart. So as you can see here, Walmart's down 3% going into its earnings. So when you look at this, you can look at some cheap calls here that are out, going for about $1 and something or whatever. So this style of investing, it realizes that, hey, most people that play options, that trade options are losers. Let's be honest. Most people lose, like a 90% lose rate that people lose over time. You're going to have some good trades, some bad ones, but over time they say, hey, a person usually net losses. So what I'm going to do here is I'm going to jump in before the market closes, complete speculative trade, and I'm just going to bet, not bet, but pretty much it is a bet when you look at it. It's speculative. Look at this website here called Stock Twist, and you can kind of get an idea of how people are feeling. Most people are feeling bearish for obvious reasons or whatever, because like I told you guys, everybody's selling it off and stuff like that. Bearish warning and stuff like that, what people are saying gives people opinions. So you got a pretty market settlement. People think, hey, it's a no-brainer that this stock is going to drop. But even if the earnings are bad, they may not be as bad as people thought. The market just has a way of taking people's money, So what a contrary trader does, what people do, they go against what's popular and they go against what everybody else thinking. They invest a little bit and they could possibly win a lot if they're right. If Walmart does something crazy tomorrow and goes up, like, most people don't think he will, the person who's on the opposite side, what I'm going to do here, I'm just going to go here and just for the heck of it, just go here and I'm going to grab some calls. As you guys can see, let's go in and market, and bam, just that quick and easy. So the whole idea behind this is that you're going against what's popular out there. Everybody says, hey, Walmart's a guaranteed drop, it's a guaranteed fall off, it's a guaranteed loss. But let's say if they're wrong, because they know that most option traders are wrong. So anyway, I just placed that trade, just recording it, and we'll see how it comes out tomorrow. All right, guys, here it is. I'm going to go ahead and close out this position. Like you guys saw me buy yesterday, the 64.50 calls are right now. Market just opened up over 300, 400%. And I'm just going to go ahead and close this out. Now, you guys saw that, right? Pretty much bought them they was going for like $60 when I purchased them. Then they were selling for about $4 and some change when you sold them or something like that. About a 400% profit. And that was just pretty much off of if Walmart did what everybody expected and just dropped off. Guess what? You lost a little money, but since it was right, you make big money. So that pretty much is it. You guys don't got any feedback, questions, comments, or concerns, all the other good stuff, drop a comment below. Don't forget to hit that like button, subscribe button, share button. To the next video, you guys already know what to do. Peace, be safe, I'm out.